Whether you're nearing or already enjoying retirement, it pays to stay on top of your finances. Nearly 1/3 of all U.S. investors are between 50 and 64 years of age, and approximately 5 million senior citizens succumb to financial abuse each year. This information comes to us from the U.S. Securities and Exchange Commission. Let's talk about how to avoid internet investment scams and internet fraud. You know, the internet serves as an excellent tool for investors, allowing them to easily and inexpensively research investment opportunities. But the internet is also an excellent tool for fraudsters. That's why you should always think twice before you invest your money in any opportunity you learn about through the internet. Hundreds of online investment newsletters have appeared on the internet in recent years. Many offers investors seemingly unbiased information free of charge about featured companies or recommending stock picks of the month. While legitimate online newsletters can help investors gather valuable information, some online newsletters are tools for fraudsters. Some companies pay the people who write online newsletters cash or securities to tout or recommend their stock. While this isn't illegal, the federal securities laws require that newsletters disclose who paid them, the amount, and the type of payment, but many fraudsters fail to do so. Instead, they lie about the payments they received, their independence, their so-called research, and their track records. Their newsletters masquerade as a source of unbiased information, when in fact, they can stand to profit handsomely if they convince investors to buy or sell particular stocks. Some online newsletters falsely claim to independently research the stocks they profile. Others spread false information or promote worthless stocks. The most notorious sometimes scalp the stocks they hype, driving up the price of the stocks with their baseless recommendations and then selling their own holdings at high prices in high profits. If you want to invest wisely and steer clear of frauds, you must get the facts. Never, ever make an investment based solely on what you read on an online newsletter or a bulletin board posting, especially if the investment involves a small, thinly traded company that isn't well known. If you believe that you've been the victim of a securities-related fraud through the internet or otherwise, or if you believe that any person or entity may have violated or is currently violating the federal securities law, you can submit a complaint using the SEC online complaint form or email them at enforcement@sec.gov. That's enforcement@sec.gov. Or contact WealthWise at www.gowealthwise.com. That's gowealthwise.com, and we'll help you contact the proper authorities.